Hello and welcome to our weekly economic video. We hope that you are all looking after yourselves in this very challenging time. Last week, our Chief Economist, BankSA, discussed our major forecasts for the economic outlook. This week, I would like to discuss how these forecasts and the impact of COVID-19 have impacted our thinking on financial market variables, including interest rates, currencies, and equity markets. A key theme in this current environment is uncertainty. There is uncertainty over when the virus can be well and truly contained and when self-distancing measures can be relaxed. There is uncertainty about when economic activity can recover. And this uncertainty is likely to play out in further volatility in financial markets for some time. A slowing in the growth of new daily cases of COVID-19 in Italy and Spain has brought back some optimism over the past week. Equity markets have recovered some of their losses. In the US, the S&P 500 index has jumped nearly 25% from its recent lows, partly recovering from a 34% fall. In Australia, the ASX 200 has recovered 19% after falling 37%. Some recovery in equities is unsurprising now that the initial panic of the crisis has subsided. However, there remains a risk of renewed declines. The deep contraction facing the global economy is going to hit company revenues significantly. There is also the risk that the downturn could be deeper and longer than what we currently anticipate, given the uncertainty over how long containment measures will last. Those industries which are exposed to consumer discretionary spending are likely to face a significant fall in revenues. Weaker economic activity has also hit commodity prices, impacting negatively on resource companies. Negotiations among major oil producers around the world led to a surge in oil prices last week, but this is overshadowed by the expected loss in demand. The deal to make the biggest coordinated oil production cuts in history was reached on the weekend, where OPEC and other leaders agreed to reduce supply by nearly 10 million barrels per day, or around 10% of total oil supply. Oil prices did initially rise, but they're lower on the day after the announcement, which points to ongoing concern about the outlook for demand. In severe downturns like the one we are currently facing, companies, particularly those which are highly leveraged and are facing sharp losses in revenue, would be facing a great amount of stress. Some of these stresses have been evident in bond markets and credit markets. Central banks, however, have provided significant support to alleviate these stresses in financial markets globally. The RBA has added a huge amount of liquidity to financial markets, and this is on top of a reduction in official interest rates to 0.25% and setting a target on the 3-year government bond yield of around 0.25% as well. The RBA has provided significant stimulus through also a term funding facility to the banks. All of these measures have had the aim of keeping the cost of borrowing low. Interest rates are likely to remain at these low levels for some time. Indeed, there is still a risk that the central bank could do more. RBA Governor Lowe has said nothing is off the table in terms of what else could be done to support the economy and help the recovery on the other side. With the global economy looking fragile, the Australian dollar tends to also come under downward pressure. We saw the Australian dollar fall to as low as 55.1 US cents on the 19th of March. In the past few weeks, however, the Australian dollar has rebounded strongly to touch just above 64 US cents. Much like what we have seen in share markets, a partial recovery in risk appetite has also benefited the Australian dollar. But given the significant uncertainty surrounding the global outlook, we think that the Australian dollar could easily come under downward pressure again in the near term. The outlook does depend heavily on whether COVID-19 can be contained and whether containment measures can be relaxed so that economic activity can restart. Signs of stabilising cases are encouraging. However, the number of new cases remains elevated globally. When self-distancing restrictions can be lifted, we don't know when that will occur, and we'll have to wait for the health experts to determine when that can happen. Thank you for listening and hope you can join us again next time.